Welcome to today's webinar, Pathway to More Efficient Finance and Accounting Operations. This is Rosalind Lewis, HFMA's Technical Analyst, and I will be moderating today's session. Now it is my pleasure to welcome today's speakers. First is Anita Mann, Executive Vice President and Chief Growth and Strategy Officer for EXL. Anita is a member of the executive committee and focuses on long-term strategy to drive the next phase of growth for EXL. In this role, Anita is also responsible for marketing, sales, and business development for EXL. Prior to EXL, Anita was with IBM Watson Health, where she served as Vice President, Data Strategy and Portfolio Officer, Chief Marketing Officer, and VP Value-Based Care Strategy and Marketing. Our second speaker is Mickey Kuhntz, VP Head of Finance Data Strategy at New York Life. Prior to New York Life, Mickey worked at several other insurance and financial services organizations, including HSBC, JP Morgan Chase, and most recently at AIG, where he was the head of corporate FP&A. And lastly, we have Narasimha Kinney, Senior Vice President and the Global Leader for EXL's Emerging Business Unit that cuts across all industry verticals. Over the last 20 years at EXL, Kinney has built market-leading capabilities in F&A, including finance transformation and risk advisory services for global clients. He brings in over 25 years of experience in CFO services, public accounting, consulting, financial management, and risk advisory services. Prior to joining EXL, Kinney worked with two of the Big Four accounting firms in their business assurance and consulting divisions. And with that, Anita, I'll turn the presentation over to you.
Thank you, Rosalind, for the introduction. Welcome, and thank you all for joining us today for a pathway to more efficient finance and accounting operations. I'm very happy to be here with all of you. I'd like to thank HFMA for giving us this platform to get together today. And on behalf of all of the speakers, we truly appreciate you taking time out of your day to join this discussion. And importantly, before we begin, let's give some recognition to everyone joining us today from a provider organization. While every part of our lives seems to have been touched in some way by the pandemic, the healthcare workers have seen it all, they've felt it all, and given their all. So your dedication is seen and greatly appreciated. So I'd like to start us off by setting some context about our current state. Lately, people have been talking about whether the pandemic is the most impactful event in our lifetimes, with the far-reaching effects it has had across all facets of life. We'll take a deeper look now about how it has impacted hospitals and health systems, specifically in areas where we think there will be lasting change. One is in the positive public perception. Not even during the debate around the Affordable Care Act has the attention of the nation focused on healthcare the way that the pandemic forced it to. The reputation of our hospitals, doctors, and especially nurses has been enhanced and elevated. And the pandemic also demanded that hospitals be flexible, forward-thinking, and open to new technology, reaching patients through telehealth, communicating with patients' family through iPads. This all became the norm. And the pandemic also shined a light on areas where we already knew we needed to do better and renewed our resolve to make progress faster in mental health, both of patients and clinical staff, and in addressing inequities. So the post-COVID health system will probably look different than it did before. The most forward-looking health systems are understanding the learnings, listening to patients, thoughtfully redesigning, and building in more flexibility and resilience. So we'll get to the impacts on strategy and finances in just a minute, but let's start with what the pandemic has meant for consumers. Let's do a quick poll to find out what you think are some of the growing trends in patient healthcare. So polling question 1 is up. Please do respond. What do you believe are the growing trends in patient healthcare? Please select all that apply. Telehealth, whole person care, transparent pricing, data and technology-driven patient care, or all of the above? Okay, so thank you all for responding. It is hard to choose between any one of these, so the vast majority has selected all of the above. Okay, so thank you. Moving on now to slide 6. So as reflected in our poll results, the COVID-19 crisis taught Americans that it's not necessary to go to a medical facility in order to get care. Before the pandemic, virtual care was kind of a sideline for most providers. But with support from CMS, it quickly became one of the most impactful silver linings during the crisis. Telemedicine was used prolifically across service lines, especially primary care and behavioral health, helping consumers and providers connect seamlessly. And this change happened very fast, faster than any new technology is typically adopted in healthcare. Over 1.5 million telehealth encounters occurred in just the first 3 months of 2020, the early days of the pandemic, representing a 50% increase over 2019. As consumers look to access care virtually, the pandemic has also spotlighted the importance of non-medical drivers of care. So access to care, social drivers, whole person health focuses on going beyond treating patients for a specific illness or disease to considering social, economic, food, transportation, education, and other factors that contribute to health. We find consumers are increasingly seeking care for their whole health, and the move to whole person health has been accelerated by the heightened awareness and pressures from the pandemic. Noting that about 60% of healthcare spend is attributed to the 23% of the population that has behavioral health conditions, a recent report from McKinsey indicated that strengthening behavioral care access through telehealth, along with integrating behavioral and physical health, leveraging data, could reduce healthcare spend by $185 billion annually. Moving on to slide 7, data multiplies with every patient transaction in real time. COVID has further accelerated the adoption of data and digital-driven patient care. Regulatory forces, API frameworks, public cloud vendors are all bringing innovative data services to market. Automation, AI, and new insights delivery channels are supporting a shift towards on-demand, personalized care. As evidence of this, the latest announcement from Google, another partnership with a health system to use data, this time with the largest for-profit system in the US. And Google intends to develop algorithms leveraging data from digital health records and internet-connected devices to help improve operating efficiency and monitor patients for preventative care. And then thinking about price transparency, while fear of COVID was a major factor by consumers for avoiding care last year, the cost burden is still widely believed to be the most significant factor. 60% of consumers want more information before deciding where to seek care, including information around price. I'm sure you all have experienced some of these pricing and billing issues too. Even those of us working in healthcare are not immune to the unexpected bills that seem to follow even well-planned elective procedures. The new mandates around the 2021 Price Transparency Rule and the No Surprises Billing Act taking effect in 2022 requires that payers and providers work now to drive data that provides transparency in pricing, billing, and financial data. On to slide 8 on the strategic and financial impacts on health systems. Research is affirming that the eroding financial performance of healthcare providers has come about as a result of the COVID-19 crisis. Falling revenues and margins, tightening cash flow, increasing losses. But innovation inspired or accelerated by the crisis has set the stage for a more patient-centered reimagining of healthcare in America, especially as it applies to consumer choice and payment. On the next slide, we see the COVID pandemic with higher acuity than usual inpatient visits and lower spend on elective and discretionary care, aggravated an already pale margin situation for most health systems. More hospitals are reporting operating losses. Expenses rose nearly 5%, leading to a reduction in operating margin to, on average, 0.5% in 2020. That's 2 points down from the year prior. Revenue and margin really took a hit due to the hospitals having to have canceled so many elective procedures during the height of the pandemic. And operating cash flow margin averaged 6.7%, and that's taking into account CARES Act funding from both Medicare payments and other cash infusions, which contributed anywhere from 14% to, in some cases, 100% of operating cash flow. Moving on to slide 10, competition is on the rise again. During the pandemic, we had seen collaboration of health system leadership, community leaders, and government hospitals sharing strategies, equipment, treatment discoveries, and sharing resources. But now we're seeing intensifying margin pressures have accelerated consolidation in the market once again, forcing smaller providers to seek the opportunity to combine with larger ones. Several factors, including a spurt in technology innovation, the promise of AI, and advanced analytics, have stirred a boom with digital investment in the healthcare deals market. There has been a surge of investment and funding for AI and telehealth startups, and M&A activity is on the rise again as of the fourth quarter of 2020, as companies look to consolidate and streamline their offerings. These trends will further strengthen the movement towards data-led care enablement, the need for transparency and data interoperability, and raise the bar on utilizing these tools to drive affordable and personalized care. Finally, on slide 11, the changing payer mix coupled with value-based care is keeping management of total cost of care as a key priority. The trend towards an increasing proportion of government-paid patients was underway long before the pandemic, but with the huge increase in Medicaid rolls, now exceeding 80 million, which is a 13% increase since the start of the pandemic, this shift has accelerated for many providers. Approximately 70% of hospital and health system leaders are preparing for an increase in self-pay consumers and Medicaid beneficiaries post-COVID. Providers must plan to survive with a less lucrative payer mix, heightening the need for efficiency and cost optimization, and creating an urgency for more data-driven decisioning. Value-based care has got to mean more than a lower total cost of care. Total cost of care is critical, but value-based care is about outcomes and experience as well. During the past decade, value-based care, of course, has increased, but with COVID, it affected different providers differently. Some were able to use it to help weather the storm, where others found their dependency on outpatient volume led to economic hardship. Moving on to slide 12. So the pandemic has started showing some signs of slowing, but pandemic-related costs are continuing to depress margins. Researchers are expecting to see margin and revenue gains in the next few months, especially in comparison to where we were last year. Some gains due to returning patient volumes, but many warn that the impacts of COVID on providers are far from over. So let's give a moment to see from everyone here with us today, how long do you believe it will take for the healthcare industry to recover financially? I guess measuring from now going forward. Wow. So I think this tells us that people are really feeling the effects still, and the most popular answer being 1 to 2 years. So that puts us in the second half of 2022 or maybe into 2023, as many of you believe as well. Interesting insight. So on to 13, every hospital to get through this is really in the position of having to relook its model. How are they positioned to best serve the local community? Who are they really competing with? Who are they collaborating with? How much can you invest? And how do you prioritize? In all cases, the pressures on the bottom line have intensified. And while the finance function has to help the institution solve these strategic challenges with new insights, it also must become more efficient so that it can spend more time advising the organization on the strategic questions. And COVID inspired a lot of innovation and patient enthusiasm for digital engagement, which is creating the ideal environment for the development of new patient-centered models. And providers are reframing their vision to include every dimension of the patient experience. Consumers are demanding it. So moving to slide 14, it's clear by bringing the patient at the heart of what we do, using data intelligently, providers have an opportunity to design unique personalized experiences and deliver better outcomes at lower cost. It's just like the digital innovators, using all the data we have to design the best possible product or experience, resulting in better outcomes for the customer and for the company. Top performing data-driven businesses use data and analytics in this way to consistently produce better decisions, automate key processes, and to enable personalized digital interactions. To successfully make this pivot, organizations are turning to their CFOs for help. As strategic partners, CFOs are expected to support their businesses uncover new sources of value through deep insights, while simultaneously taking rapid action by driving objective, granular, and fast decision support. I'll now turn it over to Kinney to discuss the role of finance in pivoting the organization towards becoming data-driven. Kinney?
Thank you, Anita. A very good afternoon and welcome again to this webinar. Firstly, I want to echo Anita's sentiment and express my sincere gratitude for the heroic work that you and your colleagues have been doing over the last 18 months. As Anita mentioned, the shift to data and digital started well before the pandemic, but pandemic has accelerated this shift. Today, the most successful businesses are all what we call as the data-led businesses. And these are not just the tech companies that we know, Amazon and Netflix, who use data for servicing and better servicing their customers. This is all pervasive today. I was recently reading about the farm equipment manufacturer, John Deere, who make these tractors. Apparently, a tractor today is pretty much a digital powerhouse on the wheels. A tractor has almost 300 IoT sensors. They have about 150 odd controllers. And these machines can today process or measure 15,000 different data points per second. Just imagine that 15,000 data points are measured by one tractor in 1 second. And these tractors today have AI, artificial intelligence, machine learning, computer vision, autonomous driving. I mean, just think of the future of farming. Now, as the businesses are making this shift, clearly CFOs are expected to play a much bigger role. The business leaders expect a lot more from the CFO and the finance organization. We at EXL had done a survey with the Harvard Business Review. We actually asked a number of global business leaders as to what do they expect from the CFOs and how the CFO roles are changing. Two things stood out for us. Number one, almost all respondents said that they want the CFOs and the finance organizations to become the strategic business partners and take a lead role in transitioning the company into a data and digital organization. And number two, an overwhelming number of respondents also said that finance organizations have to focus on customer experience. Now, customer experience is not something that typically the finance organizations focus on, but clearly that is changing. Now, Let's look at this from a healthcare perspective. As Anita mentioned, health systems are experiencing unprecedented challenges. Clearly, this requires the CFOs to retool their strategies, their priorities. So the question is, what do you believe are the top priorities for the CFOs? And please feel to select all that applies. Yeah, I'm not surprised by the response. Clearly, it's a difficult choice to make because all of these are top priorities. The data-enabled decision support, liquidity management, cost takeout, talent management. All of these are indeed the priorities for the CFO organization. Let's just look at what is it that the businesses are expecting from the finance organization. If we just flip to the next slide, clearly, health systems are operating in a dynamic business environment, and we learned that from Anita's section earlier. Now, in this dynamic environment, businesses, rather the health systems in this case, have to respond with speed and agility. And one of the most important things for the businesses to do is to accurately forecast the demand. It is critical both from a resource management perspective as well as the financial performance perspective. Investment decisions, whether, when, and how much to invest, is a very complex decision. The right investments, right calls can actually kind of transform the company's value. At the same time, the wrong ones can be catastrophic. So similar to what we spoke about the demand forecasting, investment prioritization is also at the forefront of decision making for many of the health systems. Liquidity management. I can tell you from experience working with many of our clients, liquidity management was by far the most important priority in the early days of pandemic, especially for those companies with large amounts of debt on the balance sheet. And this continues to be the focus area. Cost takeout, both strategic as well as surgical cost takeout is a very, very important and a sensitive decision. And it requires a careful evaluation. We need to evaluate both short as well as long-term impact of these decisions. And CFOs have an important role to play here. In fact, we say that the CFO role is actually changing. The expectations are changing, where the CFOs are required to play not just a chief financial officer role, but also a chief performance officer role. If you look at the expectations, that it's not only that the businesses wants us to do all of these things, but they want it accurate. They want it granular. They want it contextual. They want it with speed. Now, to deliver this, the old ways of doing things does not work. Clearly, where budgeting is an annual exercise, and budgeting typically starts with previous years as the previous year actual as the base, and doing some incremental up and down. That's not going to work. Financial analysis and reporting, which reflects the past performance, that's not adequate any longer. Investment decisions, which are driven by decision biases. Finance talent, which is largely comprised of purely the accounting professionals, that is not going to work if we have to deliver these expectations that the businesses have. We believe the only way forward for us to successfully deliver on the business expectations is for CFOs to pivot to what we call as the data-driven finance. CFOs need to transform their finance organization and move it into a data-driven finance organization. If you could move to the next slide, please. Let's look at what is a data-driven finance. Now, simply put, data-driven finance is where finance teams use data to deliver the trifecta effect that Anita mentioned, which is efficiency, better business outcome, and superior customer experience, and do that with speed. Data-driven finance actually enables the organizations to make decisions based on actual data rather than intuitions or observations. Now, clearly, decision-making requires, rather good decision-making requires good business judgment. However, the data-driven insights can definitely inform that decision-making process. It can validate a course of action before committing to it. Now, these decisions can be fairly simple day-to-day transactional decisions, such as eliminating the waste, improving the working capital, preventing the leakage, through to core strategic decisions, such as how to allocate capital, how to evaluate M&A to maximize enterprise value. Now, to achieve a data-driven finance, there are three strategic enablers that are necessary. First one is brilliant at basics. Number two, practical digital. And number three, data insights. I will look at each one of those. First and foremost, the finance organizations must get their foundational capabilities right and strong. And this could be simply process documentation. This could be internal controls environment. This could be talent strategy. This could be work from anywhere infrastructure, especially in the post-COVID world. We need to have work from anywhere infrastructure. We need to have continuous controls improvement culture. So all these are what we call as brilliant at basics. These are foundational and necessary as we make the progression into data-driven finance. Second, finance must deploy the smart digital tools and solutions. There are a number of technology solutions out there, point solutions, enterprise applications, accelerators such as robotic process automation. But finance has to apply a strict ROI-based approach, a return on investment-based approach before we deploy this. That is what we call as practical digital. Not just bring technology just for the sake of it, but make careful evaluation before you deploy any of these technologies. And then lastly, finance and data analytics. Here, the focus is to consistently generate and deploy meaningful data-driven insights. Now, this requires companies to look at the complete value chain of analytics. Now, what is the value chain of analytics? It starts with data, analysis, insights, action, and then the outcome. So all the 5 elements are necessary. Now, historically, finance organizations just do financial analysis and we just stop it there. We don't go into insights. In fact, most organizations now focus a lot more on insights, but also focus on monitoring the action and measuring the outcomes. The complete value chain, starting with data through to outcomes. Now, when you look at it practically, what does it mean to the finance organization? This means an inversion of the resource pyramid. As you see on the screen, the legacy finance is where 80% of the resources and time is actually spent on transactional finance and only 20% is spent on analytics. In the new world, that is changing. A large part of the resources and effort is being spent on analytical finance rather than transactional finance. Cost is going to come down. As per the Gartner study, health systems today spend almost between 1.3 and 1.5% of their revenue as cost of finance. Interestingly, 80% of that spend is actually people cost. In the data-driven finance world, the cost will come down, but the spend will shift. And the spend will shift to expert talent, it will shift to data management, and it will shift to other technology solutions. Now, the key question at this point is, if the data-driven finance is important, it is valuable to the organization, why are companies not embracing it? Now, let me bring up a poll question here, and let's get your thoughts on, what are the challenges that you see in your organization that prevent the pivot to data-driven finance? Are these related to inability to quantify the value, or lack of investment in technology, or just the culture or the talent? What do you believe are some of the top challenges? All right. It looks like culture is the, I guess, the most important one, and I think you're absolutely right. If you go to the next slide, Samantha. So I think there are a number of things that is kind of our challenges in becoming a data-driven finance. Number one, in fact, if you see that the statistic there, very few companies are able to successfully make that data-driven pivot. And there are a number of reasons. It is hard, it is not easy. The number one challenges that we hear is about data, the availability of the data, quality of the data. It's extremely important if you have to do good data-driven insights. Now, for many organizations, making that leap from garbage in, garbage out to quality in, quality out, it's a huge leap. The second big challenge that we hear is, how do you link the insights to outcome? I spoke earlier about the value chain, that insights ultimately has to lead to outcome. Now, creating that linkage is not easy. You can develop complex statistical models, you can develop insights, but ultimately it is the action that leads to outcome. You need to take action based on the insight to derive the outcome. Now, the proof of such outcome is hard to quantify. In many cases, it's really hard to quantify because the outcome is not determined just based on the quality of your insights. It is dependent on the quality of the execution. We find in our experience that this is a hurdle that often prevents many executives from buying into this concept of data-driven finance. Third is talent. Now, as per LinkedIn, there's been an increase of about 650% in the data science jobs since 2012. Now, the supply of the talent is not matching the demand. Figuring this right balance between hiring from outside and developing the talent inside is a lot harder for many of the companies, and there is no existing blueprint that is available. Now, if these are the challenges, what is it that the companies are doing to successfully navigate these challenges and become a data-driven finance? Let's look at the next page, Samantha. Yeah, if you could just move to the next page. So I think there are three things, and I think, as you guys rightly pointed out, culture, talent, and data are the three important pivots that need to be addressed in an integrated fashion. Now, most companies actually start with the technology transformation. They execute on technology transformation. They implement new ERPs, S/4HANA, or Oracle Fusion, or the best of the best in class in a planning and reporting tool, and they hope that this will power data-driven finance. Clearly, it's not. You have to focus on all these three elements and integrate them in and address them in an integrated manner. It all starts with culture. In fact, Gartner actually ranks driving culture as the topmost critical activity if you have to pivot to a data-driven finance. Now, changing behavior, adopting a new way of thinking, new way of problem solving, new way of decision making is like building a new muscle. This requires consistent effort. This requires buy-in from the top. This also requires persistence because there will be setbacks. So you need to have persistence in the face of setbacks. Also, the companies need to answer the question and why and what's in it for me. Because in terms of culture change, this becomes one of the most critical questions that kind of comes up. Why should I change and what's in it for me? So here, the success stories from other companies are useful, they are helpful, case examples are helpful, but nothing is better than doing it in your own organization. Do it small, start small, and then build on that. Now, we have also seen when we say start small, some companies do the pilots and they just stop at it. That is not good enough. You need to build critical mass and momentum. To build the success of the initial proof of value, there has to be a pipeline of initiatives running across the functions. Second is around the data. Now, establishing a data strategy, and Mickey will talk about it in greater detail in New York Life as to how they approached it, but establishing a data strategy and a formal governance right from the start is most critical. Now, without the proper governance, this can become an expensive non-starter. The other thing that we have seen the clients do successfully is that don't wait for the perfection. Perfection can be sometimes the enemy of good. Start small. Focus on the most important data, the most clean data that you have. Don't wait for everything to be clean. Start with what you have. Start creating those use cases. Start demonstrating some proof of value, and then build on it. And then lastly, the CFOs must address the skill gap. It starts with building technical capabilities around analytics, visualization, technology platform. But you need a good mix of business and technical knowledge to be successfully pivot into this data-driven finance. One approach that we have seen is what's known as reciprocal mentoring. A reciprocal mentoring is where you pair the data scientists with the business and functional leaders, where they mentor each other, they collaborate with each other, they learn from each other, and they kind of begin to work with each other and deliver better outcomes. Now, clearly, this is a complex journey. It requires positive reinforcement every step of the way. But the business benefits of data-driven finance is significantly outweighs the complexity of the journey and the challenges that are there. The CFOs are absolutely well positioned to capitalize on this data-driven opportunity. This will reposition the finance organization as not just the back office team, which kind of closes the books and does the reporting, but this really repositions the finance organization as the true strategic business partners contributing to the success of the company. We'll look at some of the examples. So we have Mickey. I'm going to hand it over to him to share his experience at New York Life and how they have successfully made this shift. Mickey?
Thanks, Kenny. And thanks everybody for having me and for this call today, this webinar. I just start off by just give a 2-second background. So as Rosalind brought up in the beginning, I'm Mickey Kuhntz. I actually lead the data strategy function within the finance department at New York Life. This role at New York Life is relatively new. I've been in this seat for about 6-7 months now. The reason we set this role up and this team up was we recognize, in line with what Kenny was just talking about, that as an organization, as a finance function, we have a problem with data that cuts across almost all of our finance teams. It makes it difficult for us as a function to really react to the changing needs of our stakeholders in the business. So with that as the background, we set up this role and we set up this team to focus really on those changing stakeholder needs. What you'll see here in the slide on the screen is basically a summary of all of the work that we initially did when I took on this role towards the end of the last year. I spent a good 6 to 8 weeks with my team, just meeting with the various finance teams across the organization to get a better understanding of their pain points and difficulties in working with our finance data and sometimes non-finance data, more of our operational data as well. You'll see some of these findings here, as I said, as well as some of the initial sort of observations and possible solutions, most of which we're already starting to work on. In our current state, we're sort of attacking these identified problems through an initial pilot that focuses on expense data and expense data drivers. And then we're moving on to other use cases, the broader income statement data, balance sheet, asset, liability data, that will help us sort of succeed into the future and have those use cases sort of ready to go. So as we're working on our pilot over the summer, we're already starting to harvest lessons learned, best ways of sort of setting up our new data assets, and we'll use those learnings in our use cases going forward. So turning back to the slide here, some of these problems, I'll just kind of go through them one by one. Clear ownership of our data assets, not always well known and certainly not documented appropriately. So although we've have some data owner roles out there in the finance organization, the roles they play with regards to the data they're managing varies from area to area. The lines between our finance and IT departments are often blurred, and just depending on legacy relationships and resources and systems, it sort of defines the operating model. Oftentimes the documentation is not there, the governance isn't always there, and certainly clear roles and responsibilities aren't consistent across teams. So how are we going to address that? The first thing we did was to set out and lay out a governance model and framework to move all of our data assets into over time, over the next couple of years, creating governance committees, defining data owners for each of our data assets that finance has, and really sort of changing the culture around data and treating it as the precious resource that it is for the finance organization. We're also making sure that we're fully integrated with our enterprise data and chief data office. So as they roll out new capabilities, we want to be, as finance employees, plugged into that along the way. The second problem we found largely, what I would say is largely in our FP&A space and our FP&A teams, is just a lack of governance and controls around the data post sort of month-end close or post the general ledger. So basically each finance area or each finance business FP&A team, depending on the folks in that team, their level of technical and data skills, would utilize different technologies for storing, manipulating, managing their data assets. Again, little to no documentation of the data post GL. Oftentimes teams would utilize the same term or words to represent different types of economic activity or financial metrics. So we've set out on a journey here to really define and document standards, catalog those data definitions across the various data assets to bring together some harmonization and standardization to our data. The third thing I'll talk about really is just tools. Our tool usage was largely all over the map for the various finance teams, mostly Excel based with a little Tableau and Wdesk and Click sprinkled in. We pretty much have every application at New York Life that you'd ever want, which is good and bad. The problem with that is we often identified siloed data sets and teams that only knew how to access data through the specific tool that they've been working on for years and years and years. we're currently working on ways to break down those silos, really trying to push people into our enterprise applications, which is largely Tableau, away from some of those Excel and Access data sets that people have been managing off of their shared drives for years and years and years, pushing the organization to really think beyond their own finance teams and realize that the data that they're using in their silo is probably useful to other silos across finance, right? Trying to really democratize those data assets. And last but not least, you'll see on here is really what Kenny was talking about, talent, right? We have a heavy dependency, and probably the most important thing we have is talent and culture, right? We have a really heavy dependency on some really talented data and systems subject matter experts across the finance teams. Unfortunately, in addition to these data silos I'm talking about, we also have these knowledge silos where only a few number of resources are qualified to even access and query certain data assets. Again, our goal here is to really address this issue through training of our resources, ultimately democratizing that data across multiple finance teams, shifting our employees' mindsets, in particular, some of our more long tenured resources, to give up some of that control that they've had over the years to these data assets and think through ways in which the broader finance organization can more easily access data in those data assets. So I'll sort of wrap it up by just saying we're really attacking these things through this initial pilot project. As I said, it's focused on firm-wide expenses and expense drivers, really to prove out the theories of some of these solutions I have on the page. We're also lining up subsequent use cases to test out this enhanced governance framework we're talking about, our training modules, and really the democratization of these data sets that we're talking about for the benefit of all of our finance teams and ultimately all of our partners in the various business areas. So with that, I think I'll turn it back over to Kenny, who will talk about a slightly different case study.
Thank you, Mickey. We have, Samantha, if you could move to the next slide. So we have a number of case examples. However, in the interest of time, probably not focus on any of maybe this one, that's on your screen. So this is for a life insurance company. Now, when we talk about data-driven finance, it's easy to visualize that in a transaction processing work, such as accounts payable or accounts receivable. But people find it hard to visualize in the general accounting scenario. So here is an example of a life insurance company which actually adopted all the three enablers that I spoke about: the brilliant at basic, practical digital, and the data and insights to essentially accelerate their close, bring in a lot more efficiencies, eliminate or reduce a lot of manual journal entries that they were doing, improve their reconciliation process. They actually built a AI-driven fuzzy logic to actually even better the reconciliation and the auto matching that Blackline tool was doing for them. So, and then of course they created a consolidated data mart so that you have one source of truth when you report it. So just wanted to leave this example that it's not just transaction cycles. It even applies to process a complex process like general accounting and financial close. So Rosalind, that actually concludes the main portion of our presentation. We are ready to take up any Q&A.
Okay, thank you to our speakers for that engaging presentation. See what questions we have. It says, this question is for Mickey. Does your team run into issues around the availability of data, i.e. taking until day 2 to be able to run key reports?
Sure, yes, thanks for that question. The short answer is yes. We do run into issues around data availability. We run into issues around data quality in some cases, right? Just today I was having a conversation. Our business leaders really want to look at our expense data on a vendor by vendor basis. We don't have good data in our ledger that shows the expenses by vendor, right? So we have this whole process to clean it up. That data I would love to have available on business day 1, right now the process doesn't allow it to have it ready till like business day 7 because it's so manual. We really need to go back upstream in our processes and fix the problem at the source where the data is coming in, right? As Kenny talked about before, it's like bad data in, you get bad data out. So we definitely have issues around availability of good data, and it's a lot of it's a grind. It's real hard work to go in and fix some of these legacy processes that have been with us forever. But that's the work we have to do.
Okay, and we have another one for you, Mickey.
Sure.
You said you have almost every data tool and the problem of data silos. Do you experience problems with interoperability and balancing out or reconciling financial data across systems?
Yes, and that was actually one of the other problem statements that didn't make it to the summary slide. So absolutely, part of my team's function is to create these new data assets and single source of the truth for expense data, asset data, liability data, so that we can do a lot less of this reconciling. What happens in today's environment is 2 different teams pull from 3 different sources, do something to the data offline, and then have 2 different reports that we now have to reconcile and drill back through all those transactions and try to figure out what the heck happened. What assumptions did team A make? What assumptions did team B make to get to those final? Both might be absolutely accurate analytical reports or whatever. But that reconciliation really slows us down when we're trying to get back to the business to answer an ad hoc question or just provide some basic financial analysis for them. So yes, absolutely, we have reconciliation problems, if you will. It's not that anybody's doing anything wrong. It's that we're all sort of tripping over each other with the lack of sort of that one source of truth for a specific data set. But we're getting there.
Okay, and moving on to our next question. It is hard to get organizations to quantify the value of data-driven decisioning. And this is a hurdle that often prevents many executives from buying into the concept. Can you share any of your client examples where an organization overcame this challenge, and what did they do to drive this success?
Yeah, so let me take that, Rosalind. So one of our clients, so this is a old school manufacturing client, and when they decided to sort of start pivoting to data-driven finance, one of the big challenges was exactly what you said. How do you show the outcome and link it to data-driven decisions? One of the things that they did was, clearly educating the people, bringing in external consultants to come in and speak about the benefits, share the success stories from outside of the organizations. Now, all of that helped, but I think what really helped is to kind of, do a small pilot in-house and then show the results to the larger organization. And in fact, even that showing the results and evangelizing that within the organizations was challenging initially, but they were successful in getting the buy-in from the top management. Now, once they started believing in it, and once that started sort of percolating it downwards, the organizational support started building. So I think it helps to get stories from outside. It helps to get some case examples, but nothing can substitute organizations doing themselves, albeit starting small and showing the results.
Thank you, and I think we have time for one more question. What are some of the strategies you're adopting to drive data literacy within the finance function at New York Life?
Sure, I'll take that, obviously. What are we doing? So we're doing a lot of documentation. I think one of the things that Kenny talked about quite a bit is just changing the culture and the mindset around data and treating it as the asset that it is for the organization, and starting to really try to utilize it to harvest business insights. It's going to take time. It's like anything else. It's going to take us some time to get the right resources into the right seats to drive the types of behavior and attitude that we want across the organization. But it's, it's just like I said before, it's difficult work, but it's one step at a time, one day by day, not giving up along the way. And as long as you sort of have that North Star where we're trying to get to, which is, again, democratize data assets that are trusted, valuable to our business partners, and can be utilized to drive better business decisions and results. I think over the long term, we will get there, but it is a long journey, and it is very much a culture and mindset shift for all of the finance employees, and frankly, a lot of the employees beyond finance as well.
Well, thank you. And we don't have any further questions in the queue. And with that, we have reached the conclusion of today's webinar. I would like to thank our speakers for presenting and EXL Health for sponsoring.